Hello and welcome back to the Note. Well, we are now almost through the first quarter of 2015, and perhaps the single most important trend we've seen is a very direct reversal of one of the biggest trends of last year. We can illustrate it for you with this chart. You can see that the US stock market has strongly outperformed the other stock markets of the world very consistently for a number of years, and at least so far this year that has had quite a direct reversal. Why? Obviously, the actions of central banks are very important to this. The ECB has adopted full-blown QE, while people still think that the Fed is likely to be raising rates by the end of this year. You've seen a very strong outflow from US equity mutual funds and into European equity mutual funds. But perhaps we should look behind the dynamics of that to look at the underlying growth story. There has been a strong belief that the US really is growing at last, and that it's going to pull the rest of the world through with it. That seems to be coming under question again at the moment. A lot of data outside of the labour market data for the last few months have been decidedly anemic. Perhaps most importantly, in the last week we had very poor durable goods orders for February, which concerns people. And this leads to the suggestion that maybe we've been wrong to think that the US really is growing. Now, we've had an extremely bad winter here in the eastern seaboard of the US. That naturally will have had some kind of an effect on economic activity, and we don't yet know to what extent that will prove to be transitory. But in the coming week, we do have quite a lot of important information that will help shed some light on this. As ever, at the beginning of the month, there is ISM data from around the world, and then at the end of the week, there will be unemployment data. And also, we're not far away from corporate earnings season for the first quarter, which will give us a very strong idea of how much the strong dollar really is affecting corporate America. But for the time being, once more, we've had false alarms about US growth several times over the last few years. We seem to be having another incipient growth scare in the US that might yet, depending on the data in the next few weeks, give us that first elusive 10% correction for the US stock market that people have been waiting for since 2011.